What's your 50-year plan? Go for your job interview instead of your 5-year plan. What's your 50-year plan? Don't die. Hot takes here on Rip Warn Realtors. Today, we are missing Allison, but we have Ashley Martin. Hi, Ashley. Yay. Trending topics on the news. Donald Trump has been talking about President Trump. Political correctness, right? The 50-year mortgage. Let's discuss this little animal in a nutshell and take our hot takes on that. So, traditional mortgage, 30 years. Now they're proposing a 50-year mortgage. And my thoughts on this are there's a lot of gambles here. You might have a smaller payment, but over the long run, are you actually going to build up any equity? Most people, they say on average, the average homeowner moves in 5 years, correct? 5 to 7. But now you're clocking in for 10 times that. So go take the floor, Burnell.
But also, average time in your home has gone up. So when people moved 5 to 7 years, they're moving more like 8 to 11 years now, I think, from what I've seen. But also, I don't like the 50-year mortgage because of the slower growth of equity. So if you have a 50-year mortgage and you're paying it for 5 years, you only have this much equity. If you have a 30-year mortgage and you pay it for 5 years, you've got this much. So it's more beneficial, more advantageous as a buyer owning a home
and has
to get a 30-year if you can afford it.
And how's that appraisal work? Actually, just a thought I had in my head, right? It can appraise to that amount, but sometimes you go through an appraisal, oh, it's actually worth more. But if you're stretching out 50 years, it doesn't matter. You're already starting yourself. Your cart is in front of the horse.
Yeah.
Just for
I wonder what the down payment requirements will be on the 50-year. Will it still be? I would imagine you have to put more than 5% down.
Job consistency.
You would hope you would have to put more than 5% down because that's the entire purpose.
Yeah.
But then, so why would you do 10% down 50-year versus a 5% down 30? I guess it's payment based, really. So
it's payment. So there's going to be a lot of ins and outs to it, but it's insane to me. When I saw this headline, I was like, my jaw dropped. I had to pick it up because it seems insane to me. So one little stat here.
What's your 50-year plan? Go for your job interview instead of your 5-year plan. What's your 50-year plan? Don't die.
Could be said for 30 years. Most people do not stay in their homes for 30 years.
But at least you have that equity then to move up into that forever home.
Yes. So from CNN Business, Ashley found this.
Live from the sticky note.
Live from the sticky note. So
down payment requirements will be on the 50-year. Will it still be? I would imagine you have to put more than 5% down.
Job consistency.
You would hope you would have to put more than 5% down because that's the entire purpose.
Yeah.
But then, so why would you do 10% down 50-year versus a 5% down 30? I guess it's payment based, really. So
it's payment. So there's going to be a lot of ins and outs to it, but it's insane to me. When I saw this headline, my jaw dropped. I had to pick it up because it seems insane to me. So one little stat here.
What's your 50-year plan? Go for your job interview instead of your 5-year plan. What's your 50-year plan? Don't die.
Really no. I mean, same could be said for 30 years. Most people do not stay in their homes for 30 years. 60 years.
But at least you have that equity then to move up into that forever home.
Yes. So from CNN Business, Ashley found this from the sticky note. So let's just say there's a $450,000 purchase price at 6.25% interest rate. We're going to assume that the 50-year loan also has a 6.25% interest rate.
Your microphone's
it
there.
Probably won't.
But that's probably not going to happen because think about it. When you have a car loan, for example, 5-year car loans versus a 7-year car loan, the interest rate's always higher. So we'll see. It's not out yet. But $450,000 purchase price, 6.25% interest rate. A 30-year mortgage, $2,771 payment, monthly payment. You're paying $547,000 total in interest.
Talking to your microphone.
That same exact scenario for a 50-year mortgage, $2,452 a month. So $2,771 to $2,452. So you're saving about $300 a month.
I mean, it's significant cash.
About $300 a month. Okay.
Not enough.
That would help the average first-time home buyer, probably that would help. But look at this. You are paying 87% more interest. From $547,000 at the 30-year to $1.02 million at the 50-year.
So the real winner with a 50-year mortgage is the banks.
Yeah.
Big time. It's the banks.
They're getting 87% more interest on a 50-year versus a 30-year. So
When you're buying a home and buying an asset for your future, you need to be looking at big picture, not just the monthly payment. And that's where the 50-year mortgage falls short.
Is this come with our generation and generations after us? Everyone forgetting the starter home and wanting the McMansion. I bet you has something to do with that, right? They
true.
want that 4-bedroom, 3-bedroom with a half an acre and the home alone house, and instead of going to buy their townhome or semi-detached or something of lesser value because people want to keep up with the Joneses. It could just be a generational thing, and they're just
Yes.
what's the word I'm looking for? I won't say it.
A generational thing, sure. Because a lot of kids, I think, want to move right into what their parents have, which is completely unrealistic.
Because they're finally getting out of the basement.
And and another thing I've run into a lot is people are renting these really nice apartments for $2,000, $2,200 a month, and then they're buying a not so nice house.
And the payment's more. We can't say anymore, oh, why rent when you should buy, when you could buy. It's not the case anymore. That is why they're coming up with this. They're trying to figure out, okay, how do we make housing more affordable? So let's stretch the loan out 50 years, but you're basically, Glenda Baker said this, you're basically...
Shut up, Glenda.
You're basically leasing this house then. You're leasing this house for 50 years. But guess what? You don't have a landlord to pay for all of
Your maintenance, your new roof, your furnace goes out in 50 years. So a lot of these components...
The 2 roofs you'll have to put over the course of 50 years.
Yeah.
That's
25-year roof. You're doing 2 of them.
2, 3.
Your
2, 3,
furnace has a
4.
20-year life expectancy.
Water heater.
Yeah,
how many
you're doing
times
4 water heaters.
How many times are you going to redo that driveway?
Forget taking out that HELOC so you can renovate. You have it in your home.
Exactly.
We are coming up with so many good
Man.
ideas.
Which
Yeah.
is true, though. You don't have the equity. So what is that going to look like? Did anybody look that up?
No, I just talked to ChatGPT
The equity,
for a while.
yes. So I don't remember the exact statistics, but I want to say in 5 years, with a 30-year mortgage, you have 200 something in equity, and with a 50-year, you have less than 100.
So it is, does it more than double your interest that you would pay on the loan?
Your equity
decreases more than double your equity.
If you're putting enough money down, I feel you can find some. It's never going to be advantageous, I think, to have the 50-year, but I think you can find some sort of leveling point where it won't be bad for you. I feel it's not advantageous, but if you put
enough money down up front, you already have equity in the house.
That,
so then if you need to maintain that smaller payment
Mhm.
for a period of time, it might make sense until you can refinance.
Then
later.
it might be good.
Okay,
Yes.
that could make sense.
Yes.
Devil's advocate there,
Right.
that could make sense if you're paying 20%
There's very
down.
few scenarios where this would be a good idea, but potentially that could be an option.
So it does increase options, but not all options are good. So there's maybe some circumstances where it would be okay.
I think putting it out with a blanket statement of this is going to make it more affordable, you're not giving all of the information. And quite frankly, it's not.
Very misleading.
I feel like this is the Affordable Care Act for housing.
Ooh, getting a little edgy there, bud. It's definitely a new role I'll play and try to find a quick solution to a long-term problem.
Okay, lower the interest rates. That's the problem.
Or if you have people buy a house that you can afford in the here and now. Be the traditional first-time home buyer where you work your way up. Build that equity in a smaller home. Then take that chunk that you've earned and buy that forever home. We got to stop trying to skip that step.
I concur, doctor.
It's a very important step.
Yes.
Yeah, don't. By skipping the steps, they want the shortcuts. You're hopscotching your way to bad business decisions.
And this looks a shortcut until you look at the grand scheme of things. When you look at the amortization schedule,
it's
not as pretty.
Trying to brainstorm a place where it actually works out.
Well, I think what Ashley just said, it could potentially. So you're putting 20% down. You already have that equity, but you're planning on refinancing it within a couple of years.
Yeah.
Which you'll be able to do because you will have the equity that you already paid for.
Yeah.
What
Well,
equity you're
eventually
gaining.
eventually the amortization table will start going in your favor.
Flip. Yes.
Yes.
Yeah, in
Always
40
does.
years.
If
Yeah,
you,
it will be.
But
yes.
yeah, exactly. Once again, job interview. What's your 25-year plan? Retire.
Not
Retirement.
like that.
Yeah.
Yeah, I don't know. And even that qualifying for, I don't know. This is kind of crazy.
It's kind of wild, but that's
Yeah.
why we're sitting here talking about it.
Will the qualification change for a 50-year?
Yeah, I bet you there's got to be a long-term employment, right? I bet you it requires some sort of strong credit score and some long-term employment. You can't be the same place for 1 year and say, okay, we'll give you a 50-year. But maybe they do. I don't know. I kind of want to see.
It's the same with 30
Yeah.
though. I mean,
Yeah,
what do they
15 or
do?
30 is.
Yeah, it's 2
Yeah.
years.
Yeah.
They've been at the same place. So
Or
I
same
don't-
industry. You can even change
Yeah. And
employers.
they're not even super tight on that either.
I know.
I went from being a janitor to a car salesman. Well, same industry. You've got a loan.
Janitor at the dealership.
Janitor.
You know.
Ooh, I worked in the building.
But really, I think too, the mentality of this upcoming generation, let's just make a payment. We only have to make a payment. We don't have to pay cash, credit.
Month to month focus, which is going to be detrimental in the long run.
Dangerous. Very,
Yeah.
very dangerous.
Yeah.
I agree. Well, I think that's going to wrap us up for today for our hot takes on the 50-year mortgage. I guess if anybody else has any thoughts, opinions, inquiries,
Don't do it.
breaking news,
Tell me what your thoughts.
or humble opinions, don't do it.
Yeah.
Don't do it. It's not
Talk
a
to your
great idea.
lender. Talk to your
Be
financial
skeptical.
advisor. Yeah. If it sounds too good to be true,
It
is.
probably is.
Yeah.
catch you next time. Peace out, Girl Scouts. Deuces.